Hey everyone, welcome to the Power Sector Review, where we take a look deeper into the market segments using our equal weight sectors and subsectors and taking a look at some ETFs along the way. Today we're going to jump right into the equal weight sectors, taking a look at kind of where things landed here towards the end of the week. We did have a week where the markets kind of put in some stakes and did not fall quite as hard as we've seen recently. So let's take a look and see what our setup looks like. We're still very much in a defensive stance with energy on top, still the top gainer at almost 4% for the week. Then utilities, second, consumer staples, and financials. None of that screams growth at the moment. As a matter of fact, the growth scenarios, consumer communication services, consumer discretionary, information technology, and healthcare are all still pinned down at the bottom. Now, in looking at this, we want to see that our two biggest movers for the week were financials and utilities. And then when we sort this based on actual gains, we'll notice that energy and utilities were up top, but it's interesting, our number 3 was consumer discretionary, something we probably want to make note of since it's a weak RS and has gotten pretty well pummeled here in the last few weeks. As we move down into the subsector level, we're going to stop here real quick and flip over to our quick views and take a look and see kind of how the markets are setting up. They were pretty washed out last week. We had a lot of dark red on this. This is the percent above the moving averages, and we used the 20-day, the 50-day, and the 200-day, and we had this across the universe, all the major sectors in the middle, and then the subsectors around the edges. And as you can see, there was a lot of washout here in consumer discretionary even to end the week, as well as real estate, which got hit real hard over the last couple of weeks, came down after being one of the stronger areas into the end of the year. And then also we had information technology was all down in dark red here pretty recently, but it worked its way out. Now our strength has been energy, which we've all seen. Financials is still kind of there. And then when we move over to the short-term breadth view, this one got even more oversold earlier in the week and late last week. Posted quite a few dark red scenarios, and we're seeing a lot less new lows here into Friday, but we really haven't seen the new highs start to pop up yet, which is what we want to see. It's 10-day new highs on this one and 10-day new lows, the percent above the 20-day moving average, and then the breadth thrust. Almost all of these breadth thrusts were in extreme signals early last week, some for the second time in diverging. So now we're seeing some strength come out of here. Now it's interesting to see that utilities already have a larger percent moving over the 10-day highs, as we saw that they were one of the movers for the week. And a lot of this has to do with basically not only going down less, but also when they bounce pretty hard here on Friday. You can see 22% of the sector as a whole is making 10-day highs, by far the most of any of our major sectors. Now flipping back over to the subsectors, I want to look at this for a couple scenarios. Number one, again, we still have on the pure rankings, oil and gas, utilities are up at the top, and they're pretty much dominating the first 7-8 of the subsectors. But when we sort this by the performance for the week, while still having quite a few of those, we have a few that are jumping in here from the bottom. It was very notable to me that retail was up 3.7% this week. That was a big move, especially with something with such a low relative strength. Now, when you're in a situation like this, I want to make sure I talk a lot about using the middle relative strengths for finding new opportunities. That's typically more in a bull trend and something that's already strong. If we're in a situation now where we've seen large pullbacks and we've seen some things just really get washed out, like some of these subsectors, we want to focus on the strongest in them, maybe lean our scenario up into the strength, which I'll show you here in just a minute. But as we go down in here, we can see that from a positive for the week, we have a lot of consumer discretionary sneaking up in there with the others. So this is an area we might want to focus a little bit on if we're looking for a reversion. Now, if we look at just the RS movers for the week, you'll see here again communication services, consumer discretionary, industrials, financials. Okay, so there's kind of a mixed bag, but there are quite a few consumer discretionaries here littered up in this top area. We are going to start in the energy sector since it is the strongest, both on relative strength up here as well as the chart itself. This is one of the few that's still in an RSI bull range. It pulled back to test the 50 level and is now bouncing a little bit. Now the question here is, can this continue to hold up in the face of strength in the dollar, and or if the geopolitical scenario starts to calm down a little bit? But right now, from a chart standpoint, once we take all the narratives out, this is one of our strongest areas. It looks like a cup and a potential handle. Looked like a failed breakout, but now it's coming back up to challenge that level again already. So we want to continue to keep our eyes here. From a breadth standpoint, really by far the strongest. You have really strong MA breadth here. Everything's over the 50% level. The longer terms are up in the higher quadrants, and your breadth thrust never came down as deep as most of the other sectors did. And then the relative comparatives are all still strong. So as of right now, there's nothing that says energy is losing that favor. It's something that some of the larger names may be tired, but there are a lot of names in here that still have the potential to perform. And then when we look at this from a stance of rankings, oil and gas production, then services, which I like the services a little better here right now, transportation and consumable fuels. Let me just show you real quick on the services what I'm talking about. Oil and gas equipment and services has moved its way up in the rankings, and it is also in a decent RSI bull range here and just under the breakout level. We have another sector here with strong breadth, and then we pull down in here to the relative comparatives. As you can see, this is really a long sideways move in the equipment services. We're starting to see versus the other energy, it's starting to curl up. So it's showing that inside the energy complex, it's starting to outperform a little bit. This crook here at the end of the week we want to watch, but again, we're right here at an internal breakout level up here near the highs of this range. The next sector I want to jump over to is consumer staples. Obviously, it's been up in the top performing area as well. Not as much at the moment with its 3-month at 82. It pulled back just a little bit versus the other sectors, and it's 1 year only at 55. But that 1 year, as you can see, the black line here is continuing to try to move up over time as it holds up well. And in this particular market, it has. It's one of the few that has a higher low. In the equal weight sector that we do, even though it is in a bear range, you can see it pulled back and it has put in a divergence here it has put in a higher low here, and then it had a small divergence on the CFG here in the particular chart. Now consumer staples, there's a lot of names that are looking like they're set up, and as you can see on the equal weight standpoint, it never made it back up to these previous highs, but this pullback here has held up better than a lot of areas in this recent market situation. Now from a breadth standpoint, got pretty washed out on the short term, and then the midterms are holding right towards the middle. So again, if you're one that thinks that these markets are not going to come back very strong, if this is going to stay a defensive market for quite a while, this might be a good chance to get this on a pullback and see if it can continue to improve. Again, make price prove it to you, but this is where I might be watching if you are still much more concerned about how the rest of the year is going to pan out. With consumer staples, again, you can see that it's been running up for quite a while here on the relative strength since late November versus the universe and versus the IWM, but just now a little more, mid-December area here versus the rest. Now it is rolling over in this week, and that's one of the questions we have is it going to bounce as hard as some of the areas that got beat up a lot more? It certainly may not, but if you're looking for a longer term positioning and you're more concerned about these markets and the economy from that standpoint, this could be an area that gives you a decent entry here soon. Wait till it sets up for you and gives you that opportunity. As we mentioned a minute ago, utilities is one of the areas that had new 10-day highs and was outperforming from that standpoint. But as a whole, utilities is still in an RSI bear range and just now turning up, and it's at the low of its range. One of the things about utilities from a relative strength standpoint, which it is gaining over the last 3 months here, but one of the points we need to make here is that this tends to be a slower mover. So the fact that it lost less on the way down is helping support that relative strength. Now, that's not bad because obviously that's less drawdown in your portfolio, but the question is from here, does it have the kind of growth and movement that we're looking for? Kind of like consumer staples, if you are on a long-term bearish still, this would certainly be one of the areas I'd be focusing on and seeing if this little reversal here gets more attention than the growth areas if we get some continuation in the markets as a whole. Financials have also held up pretty well here over the last couple of weeks comparingly. While falling with everything else, it has definitely held on our equal weight charts the support level and almost a polarity level that we see here from last year. So financials again are one that's kind of a middle of the road. You can get good movement in them as well as can be a very defensive one, especially if interest rates continue to go higher. Now I'm not going to pull down through here a whole lot, but again you can see even with this one the short-term breadth got pretty washed out, as did with the whole market, but now trying to improve with the long-term percent above the 200-day moving average still up in the 60s. Now we flip to the other side of the equation and look at the things that really got beat up. Consumer discretionary is definitely one of those, but I noted that it was an area that actually was positive on the week just by a hair. And as you can see in our equal weight chart, we have a scenario to where the CFG is diverging and then the secondary, so you have the long to short-term divergence on the CFG. It didn't quite make it on the RSI chart, but this short-term divergence a lot of times, and as my probably 12-year-old post now says, it's a scenario to where short-term divergences can pack a punch. They can be bigger than we expect, but you have to make sure price actually confirms and follows that. Now on the consumer discretionary chart, when we look down here, very washed out breadth, everything below 20% on the moving average breadth, and just seeing very small divergences on just the short-term breadth measures here as well. Again, a lot of this takes follow through in the market, but these are the areas that have gotten beat up the most. From the relative comparative standpoint, you can see here again everything's still pretty much pointing down, not really catching much action. However, from a percent making new highs, new lows, we're seeing divergences across all three here over the last week, even though over the last month we've seen a lot more new lows crop up on this scenario. So again, from a bounce standpoint, I could see this one coming back up into the underside again if markets get traction as a whole. Technology is kind of in that similar boat to where it's basically finally took the last, the big leg down after it had been holding up over the last couple weeks, and then basically pulled down into a bear range in the RSI and in the CFG getting down towards zero. It's trying to kind of took a stand this week, but again, not really seeing much so far as breadth, still at 9% above the 10-day moving averages. 20-day, sorry, 11% above the 50-day and only 24%. Again, these are washout levels, and looking at this breadth thrust, it's one of the deepest levels we've seen in a long time, showing the velocity to come down here. Now we just have to see if they can build on it and if people want to buy back in at these levels. As we're going through and seeing if these markets bounce, that's going to be the big thing to watch for, is are people buying back to growth areas, or are they continuing to put new monies into the more conservative, more defensive based areas on this bounce? Both will likely bounce, but we can look inside here and in this type of in our website to see which areas are getting the most participation, both from a velocity standpoint and from a number of stocks moving in a certain direction. Technology is certainly one that's very oversold and something that I would say we want to be kind of keeping our eyes on as always, because it definitely can have some of the fastest moves out there. All right, so to summarize, that's going to wrap things up for today. But what I want us to be looking at is that we're just very, very early in the potential chances for a bounce here. It does look like the lows could have potentially been put in for now last week. However, we got to be open to that being retested or broken. While we're here, though, we got to be looking at where is the participation coming in. This week's going to be really important to pay attention to pretty much every day to kind of get an idea of where we're getting the most new 10-day highs, where we're getting some of these breadth reversals, and whether we're seeing it more in the large caps or the small caps across the board. We'll be looking for it, and we'll try to get you some information as we see it. Hope everybody has a great week, and good luck out there.